Hey everyone, welcome to another show. Joining Mark Moss as we talk about Bitcoin, we talk about cryptocurrencies, and we talk about how they relate to us in our life, not only just in the markets, but politically, socially, and pretty much every area, every fabric of society. That's how deep Bitcoin is touching us. Now, today, the markets are seeing red. What does that mean, seeing red? Well, when you look at the stock markets, when you're looking at the candles, if you're looking at the price action, like with technical analysis, you notice there's green candles and there's red candles. And of course, green means go. That typically means the markets are going up. Green's a good sign. But today we are seeing red. And so that means that we have red across the entire market, which means we have selling off. Prices are dropping. And we see that all the way across the markets, including the stock markets, the gold markets, and even with Bitcoin and cryptocurrencies, they are down. So that's the big news today that we're going to talk about. Now, I like to say that price is a short-term distraction. It's not something that I try to focus on every day because with brand new technology, the price, the daily price, isn't the biggest thing to be paying attention to. But we are going to look at the price, and I'm going to tell you what I'm thinking about it. But just to give you a little bit of perspective on why we don't want to look at the price is because with a new technology, it's too young, it's too volatile, and so the price moves all up and down. Let me give you an example. So imagine a new technology, let's say like Uber, right? So Uber is one of the stock market darlings, what we call a unicorn, right? A Silicon Valley unicorn. It reached over $1 billion valuation. But imagine if when Uber was first invested in by the venture capitalists, imagine if that day it went public and the price was open for public on the open markets. And every time you saw a news headline, Uber got a new city, they're going to move into this city now, and then the price shoots up, everyone's excited. And then if you remember Uber's path, then you remember that then the next news article said Uber was banned in this city, and then the price goes down. Oh, but now they got another market, and the price goes up. And now the taxi union has filed an injunction against them, and the price goes down. And imagine if you saw this brand new technology barely getting going, and you watched the price being traded in an open market every single day. Imagine how volatile it would be. But of course you didn't. So the way those types of venture companies work is that they're not publicly traded until they've had a chance to grow, until they've had a chance to kind of work through some of that volatility. And so, 10 years after they've been out, after they've worked out a lot of those kinks, then they go public. But Bitcoin hasn't been done like that. So Bitcoin has been publicly traded. It's been open since day one. And so for the last 10 years, while Uber, Airbnb, et cetera, were hidden, were private during that time, Bitcoin has been open. And so every single news headline seems to move the market. And so that's why I think looking at the price is a distraction. We are going to talk about the price, but I'm just trying to set the stage for you here. So before we get into that, one more thing I'd like to say is that the way that you look at or the way that you evaluate new technologies, like an Uber, like an Airbnb, whatever it may be, or like Bitcoin, isn't in the daily price. First of all, just a general rule of investing, I'm just going to tell you something. If you're looking at your investments on a daily, weekly, or even a monthly basis, you're never going to make it. I know that sounds harsh, but you're never going to make it. If you're looking for daily, weekly, or monthly performance in anything, you're never going to make it. And so you need to be zooming out, and especially when we look at new technologies. Now, let's talk about this. So today, like I said, the markets are red. As a matter of fact, the Dow has dropped 700 points. The S&P 500 has dropped more than 2%, which doesn't sound like a lot when you're looking at Bitcoin, but the markets are red. And so headlines all across are saying Bitcoin is dropping. As a matter of fact, CNBC right here says that Bitcoin falls as much as 10% as risky assets tumble globally. And then the next part, regulatory concerns intensify. So let's dig into that. So the price of Bitcoin, it dropped sharply today. We see that the markets, again, right, all the stock markets are shedding risk. And so we kind of have like this risk on or we have this risk off. Now, in the past, when the markets weren't so closely tied together, we had these risk on, risk off assets. And so what that means is that when everything's going up, we're in this bull market, that's risk on. When the markets are crashing, then you want to take that risk off. And so what assets do you go into? And so typically you would go into gold or something like that. Although gold has proven not to really be such a risk-off asset right now. We can talk about more of that later when I talk about where I think this is going. But for right now, the markets are just correlated. They're moving together. And so we're seeing that. And so while Bitcoin is, as it says here, while Bitcoin is often called a safe haven asset, the reality is the entire market is kind of moving together, but that's only part of the picture. I want to talk about that in a minute. But we need to know that as of today, Bitcoin lost about 10%, which means it dropped down to about $43,000. So that's the numbers. We were at about 47,000 when the markets opened up this morning. At the time of this recording, we're down to about $44,000. Now, no reason to fire the alarm bells and pack it up and go home. It's not time to do that just yet. As a matter of fact, as bad as this crash is, as devastating as these news headlines want to make it seem, the price is all the way back to where it was a month ago. So what I like to do in times like this is to zoom out and let's get some perspective on things. Come on, right? Like the sky is falling, the whole world's crashing. Is it really? I mean, the Bitcoin price is all the way back to where it was just 30 days ago. As a matter of fact, it's still up almost 50% in the last 60 days. So even with the crash that we've had today, we're still up 50% in just the last 60 days. And we're still up over 300% in 12 months. So while, oh my gosh, the sky is falling, we've lost $4,000 off of Bitcoin today. Come on, let's just put this into perspective. Now, this is something called volatility. Prices go up, prices go down. And while a lot of people don't want that volatility, while many people are afraid of volatility, what they don't understand is that volatility works both ways. Volatility goes up and it goes down. There's no way that Bitcoin could have gone from zero to today, right now, $44,000 without volatility. It goes both ways. And so volatility is the price that we have to pay to have these explosive types of assets. So the bigger an asset gets, the less volatile it becomes. But that's not necessarily a good thing, right? Like we're hoping that Bitcoin goes to 100,000 and 300,000 and 500,000. Well, how's it going to go from 50,000 or 44,000 right now to 500,000 without volatility? The answer is it's not. And so if you want to participate in those types of gains, then you have to be willing to pay the price, which is, of course, stomaching the volatility. Now, there's a couple more headlines that we're going to dig into, and we're going to talk about what some of the other people are talking about with Bitcoin. Of course, like I said, it's lighting up the news headlines. The Independent put out a piece talking about the crash and how all this weakness is coming, and maybe it's time for us to pack up and go home. I guess that's what they want to tell us. And we can see some of these articles. We can see that El Salvador is buying the dip. Are they scared? So there's a lot more that we're going to talk about. But more importantly, after the commercial break, I want to come back and I want to talk about how we can stomach this volatility, how we can have the conviction to stay in this with what we call in the Bitcoin space, we call it diamond hands. Diamond hands mean you are strong and you can hold on to the dip because, unfortunately, the weak hands get shaken out and they transfer their wealth to the strong hands. So the weak hands buying at the top of the market when everything looks good and they want to get rich overnight. And then as soon as the market starts crashing down, they get scared. They read these headlines, they get shaken out, and they sell back to the strong hands at cheap. And the strong hands buy it up. So I'm going to come back after this commercial break. We're going to talk about how you can transform your hands from weak lettuce hands to strong diamond hands so you don't get shaken out, so you can ride this market all the way up to $500,000 or higher. So let's go. All right, so we're back, and we are talking about this Bitcoin sell-off that's happening today. While news headlines are trying to tell you to panic, I'm trying to give you some different perspective. I was making the case earlier that if you're focusing on any investment, I don't care if it's Bitcoin, if it's anything, if you're focusing on it on a daily or a weekly or a monthly basis, you're never gonna make it. nothing good comes quick, nothing good comes easy. In order to make the big gains, the asymmetric bets. The asymmetric bets are what I call asymmetric bets because they have more upside than downside. And that's what we want, right? We want to risk a little bit to get a lot. And in order for those to play out, triple-digit winners, quadruple-digit winners, it takes time. You have to get into a trend early, and you have to allow that trend to develop. It's not going to happen in a day or a week or a month. It's going to take a year. It's going to take multiple years for that to happen. And so if you're looking at it on that short of a time period, you're going to constantly get shaken out. And so I promised I was going to talk about how do you not get shaken out? How do you transform what we call lettuce hands, which is weak hands, into the strong diamond hands that can hold through these dips? And so a couple things that you do is first off, you would look for some perspective. And so that's kind of where I was talking about some of these charts. And so if we want perspective, as bad as this Bitcoin sell-off is, the media wants to tell us today, like I said, we're, all the way back to where we were 30 days ago. As a matter of fact, August 18th. But we're up 50% from where we were on July 21st, just 60 days ago. We're up 300% on a year. And so, again, if you're looking at it in days or weeks, you're never going to make it. But if you're looking at it in months or 6 months, you see a completely different picture. But it's more than that, because I was also saying before we took that break that when you're getting into something so new, so revolutionary like Bitcoin, a new technology. And Bitcoin isn't just a new technology. It's a technological revolution. Now, what does that mean? What's the difference between a technology and a technological revolution? Because it sounds like a big difference. So what is it? Well, a new technology would be Uber. That's cool. We didn't have an app before that could hook me up with a limo or a driver. That's cool. Or it's an iPhone. iPhone's a new piece of technology, and it's been great. But a technological revolution is something that changes all of humanity. It changes the course of humanity. That's how big a technological revolution is. Now, there's only been 5 in the last 250 years. I'll just run them through real quick. So first, we had the Industrial Revolution in the 1700s. That changed humanity for all of history. People worked in the farms, in the cottage industry. Now, in the industrial age, people worked in the cities. Then we went, the next one, and these run on about 50-year cycles. So the next one was the age of steel and steam engines. So again, all of humanity, we had horsepower and manpower, and that was it. But now we had steam engines. We had steel. Steel, we could only build 2 or 3 stories with bricks. Now we could build skyscrapers and bridges and ships. Steam engines, it was massive. 50 years later, approximately, we had the age of electricity. It changed humanity. For all of humanity, we had candles. Now we had electricity. At the time, of course, electricity was kind of like a digital candle, and it was that. But of course, today, electricity allows us to do what we're doing right now, right? I wouldn't be able to broadcast to you right now from probably somewhere across the world from you if it wasn't for electricity. Then moving forward, we had the 1908, we had the age of oil, automobile, and assembly lines, mass production, which changed humanity. Imagine, for all of humanity, people walked or rode horses. That was it. And then we had cars, trucks. We could transport things. Fast forwarding, 1971, we had the age of the microprocessor. The microprocessor changed humanity. It gave us personal computers. It gave us telecommunications, the information age, and the internet, which, of course, changed humanity. Now, if you're following along, those happen about every 50 years. And, of course, 1971 plus 50 years puts us, if you're good at math, right here today, 2021. And we're on the verge of another technological revolution. Not a new technology, a revolution that will change humanity as we know it. Will change the face of the future. And so when you're getting into a trend that big, you have to allow it to develop. You can't judge it on a daily, a weekly, monthly basis. If you do, like I said, you're never going to make it. So one thing that you would do when looking at something so big would be to try to forecast where it could go in the future. And, earlier before the break, if you were with us, I talked about Uber. And I talked about, venture capitalists investing into Uber. So, for example, Imagine if we were in Silicon Valley and I'm going around pitching Uber, which, by the way, at the time, there was nothing like it. And so most people didn't know what it was. And most people turned it down. It got turned down by venture capitalists everywhere. They didn't know what it was. They didn't get into it. And so it got turned down. But I would basically go and I would pitch Uber and I would say, I'm trying to raise $100 million. And someone would be like, what? $100 million for what? What the heck is this? I don't even know what you're talking about. A rideshare app? Come on. How the heck do you come up with that number? And I'd say, well, the taxi industry is this big. If I can get 5% of that, and the the limo industry is this big, and the van share industry is this big, and if I could just get a couple percent of each one of those, I could easily get to that number, right? That's kind of how they do that. So if we were looking at Bitcoin, a new technology, a technological revolution, we'd also try to come up with some type of framework, like where could it go in the future? Well, for example, a lot of people call it digital gold, which it is. It's digital. It is like digital gold, but it's so much more. But let's just stay on this train of thought for a minute. So we have digital gold. How big is the gold industry? Well, it's about 12 trillion dollars. About 12 trillion. Bitcoin's less than about 1 trillion. So it has a 12x upside from here. If it could be digital gold, which many people say it can. Citibank, JP Morgan said they believe it can overtake gold. That's a 12x just from that. It's also been called like a Swiss bank account in your pocket, because basically a lot of people would use a Swiss bank account or like an offshore bank in order to kind of keep money out of a banking jurisdiction. Now, over the years, we've seen like Russian oligarchs getting, $500 million seized from their Swiss bank accounts. So it's not so good anymore. Bitcoin's a better version of that. So could it get part of that market? Well, that market's about 30 to 40 trillion. Could it get 10% of that? I mean, it's way better. It could take it all, but it could easily get 10%. That's another $3 or $4 trillion right there. Then you have to take a look at how big is the stock market? How many people are putting money in the stock market because they don't want to lose dollars, but if they had other options, they can go somewhere else. Oh, there's another 100 trillion there. What about the real estate market? And we can go on and on and on. Next thing you know, there's $400 trillion of assets that could potentially come over that way. And so when you start to look at it like that, seeing Bitcoin go 300x from here doesn't start seeming that crazy after all. And so is Bitcoin expensive or cheap? Well, is it expensive compared to where it was a year ago, or is it cheap compared to what it will be in 5 years? Now, I'm going to walk you through some more of this framework. I want to show you exactly how we can try to come up with those valuations to understand, is it cheap or is it expensive? I also want to show you what some of the smartest people in the world, smarter than you and I always believe that I don't want to be the smartest person in the deal. And so I'm going to show you what the even smarter people than me are doing right now so you can follow along, because I believe that success leaves clues. If we can copy the most successful people, then we should achieve about the same results. And so when we get back, I'm going to talk about what the smartest people are doing, how we can come up with those valuations, and that's what gives us those diamond hands. So stay tuned. All right, welcome back. Now, we were talking about how to understand if Bitcoin is cheap or is expensive, because that's a question I get asked all the time. Should I buy now? Should I wait? I think it's too late. Bitcoin's too expensive. Is it? Expensive or cheap compared to what? So that's the question you have to ask yourself. Everything's compared to what? Everything's relative. One problem I see with people in every discipline of life is very rigid thinking, and that's a problem. Everyone thinks so rigid, so linear, but they fail to understand that everything has trade-offs. There's an opportunity cost to everything. And so when you ask the question, is it expensive or is it cheap? I would just say again, right? Expensive or cheap compared to what? Relative to what? Is it expensive compared to where it was 10 years ago when it was a penny? Heck yeah. I mean, it was a penny. Now it's $47,000 or $44,000 at the time of this, as I'm talking. So it's expensive compared to zero. Sure. Is it expensive or cheap compared to $500,000, where many of the smartest people in the world think it can go? Well, it's cheap. So when you ask yourself, is it expensive or cheap, compared to what is the answer? Now, let me give you, I've actually kind of tried to break this down. If you were with us in the previous segments, I'm not going to rehash all that, but we talked about, like comparing it to like a new technology like Uber and how Uber got its valuation, or any new technology being pitched to an early round angel investor in Silicon Valley. They try to determine like how big could this go based off of the markets that it was going to disrupt. Like where would it pull its value from? And so I kind of broke down some numbers of how it can pull from gold, it can pull from offshore banking and traditional markets, et cetera. And so we kind of looked at that. But also, we have to understand that just because it has the potential to pull from those markets doesn't mean it happens overnight. It takes time. And the best investments take a lot of time. I mean, they take decades to play out. I mean, like let's take Amazon, for example. I'm old enough to have started my investing career. Well, I started in real estate when I was 18 years old, buying and selling properties. And then I got caught up in trading these things. My roommate quit his job, and we were at the house, and we were trading these things called internet stocks. Oh man, that was a long time ago. But at the time, nobody knew what these internet stocks were. Kind of like people don't know what trading cryptocurrencies are like today. And we would trade these things called internet stocks, and there was hardly anybody trading these things called internet stocks, and talking about them back then was probably just as wacky as talking about these different cryptocurrencies today. It was a lot harder back then because we didn't have cell phones that could, we had cell phones, but we didn't have smartphones that had apps. We couldn't trade from them. But, through that period that ran up to this dot-com boom, which is when, the year 1998, 99, 2000, when the markets basically went to parabolic new heights. And then there was the famous dot-com crash after 2000, everything sold off. And if you look at like Amazon, Amazon went public in like 1997 for like $1. Then it went to like $5. And then by 2000, I think it was up to about 75, $80, I think, about $80. Now, why did you buy Amazon? Did you buy Amazon because you believed in the story that they could become a leader in this e-commerce space? And then let me tell you another story that there was no such thing as e-commerce. So you had to kind of believe that there would become this market of e-commerce because there wasn't. By the year 2000, I think less than about 10% of the people had ever bought anything online. As a matter of fact, side story, in the year 2001, after the dot-com crash, after the market blow-off, I decided it would be a good idea to start an e-commerce business and sell products online at the bottom of the dot-com crash. And it wasn't easy. You couldn't use Shopify. There was no way to set up like this online store. And so I literally had to go hire a developer to develop this e-commerce store from scratch pretty much. There was a shopping cart that they could kind of use. It was called Miva Merchant back then. I think it probably cost me $15,000-$20,000 at that time to set up this e-commerce store. And I went to these companies and I said, hey, I built this website and I want to sell your products on my website. I was all excited and I was all proud of it. And they laughed at me. They said, nobody would ever buy anything online. That's ridiculous. And I said, well, I beg to differ. I think they will. And, I've spent the money. I got the website and I'd like to sell your products on my website. And they said, no, we don't even want our products sold on the internet. And so that's what it was like in 2001. So going back to the Amazon story, Amazon came out in 1997, 1998, and they promised to be this leader of this e-commerce movement, but there was no e-commerce back then. Like I said, in 2001, people laughed at me. And that was hard to imagine from here. And so if you bought it because you thought it could be a leader in this e-commerce space, then you would have had to hold on until either one of two things happened. Either one, it happened, or two, something changed to where that thesis was no longer valid. So, for example, Amazon went from $1 to $80. You made so much money, you're a genius. But then after the dot-com crash, it crashed all the way back down to like $5. From 80 to 5. Oh my gosh. It's sold off. It's over. It's never going to happen. Well, was that true? Was Amazon still in business? Were they still working on becoming the e-commerce leader of the world? Because they were. The price crashed, yes. But were they still in business? Were they still working to fulfill that mission? Did you still believe in it? Why did you buy it in the first place if you didn't believe they could do it, right? So if you believed they could do it, and they were still in business, and they were still building out, and by then most of the other people that were challenging them were out of business, and so they were the only one left. And if you believed that was going to happen, then you would have held. And of course, eventually it got back to, $10 and $20 and $50 and eventually it got back to $80, back to its all-time high. Maybe at that point, a lot of people jumped out. Oh my gosh, I got my money back. I'm out of here, right? And they sold off. But eventually, Amazon went to $100 and $200 and $500 and $1,000, $2,000. At no point did that thesis of Amazon becoming an e-commerce leader ever get broken. Did it ever become invalid? And so the right answer would have been to continue to hold through that time. And so that's the way it works when you're looking at something so new, so revolutionary, something like Bitcoin. We have to look at why did we buy it? What do we believe it can do? And then as we're holding it, is that thesis, is it still valid? Or has something happened that's broken that thesis and I should get out? And those are the questions you have to ask yourself, not looking at the price action. Now, I know a lot of people, I hear it every day, oh, well, why wouldn't I just sell high and then buy back in again low again? Well, that's great. If you find a crystal ball that can tell you exactly when to sell high and buy back in low, make sure to message me, because you and I will keep it a secret. We'll be the richest people in the entire world. The fact is, nobody can do that. And so that's not the way to build wealth. The way to build wealth is to get in early on a trend and hold that trend for a long time, like the richest people in the world have done, like Warren Buffett does. And so let's take a look at that. Like I said, I don't want to be the smartest guy in the deal. So let's look at who the smartest guys in the deal are and what strategies they're participating in, what strategies they're using. And then can we copy it? Can we do the same things they're going to do? There's one of the smartest guys in the technology space today. I want to dig in. I want to look at what he's doing. I want to show you what he's doing. And I want to show you how we actually have a way to front run him. I want to look at a leader of a nation who's pretty dang smart. And I want to see what he's doing. And is there a way we can front run him? And if so, maybe that makes us a little bit more confident, helps us have those diamond hands. So I want to look at each of those figures, see what the smartest people are doing, the leaders in this technology space and of other nations are doing. And so we're going to talk about that in just a minute. All right, welcome back. You're listening to Mark Moss, and we are talking about Bitcoin. We're talking about Bitcoin adoption. We're talking about Bitcoin price action. We're talking about where the price could eventually go. And we're looking at this from a bunch of different angles. I gave some stories as to different stories, lessons that I've learned along the way, ways that you can transform those weak lettuce hands into those strong diamond hands. Now, I talked about how what I like to do is anytime I've invested into a deal, and I've been invested into private early round deals for over a decade, and I have experience. I'm somewhat educated in it, I guess. I'm experienced in it. I've done good. But one rule I've always followed is I don't want to be the smartest guy in the deal. And so typically when I'm looking at these deals, I'm like, well, who else is already in? There's a deal right now that I'm jumping into with another company. And I kept saying, well, who else is in? Who else is in? And I didn't want to commit until finally they found a new lead. And the reason why I do that is because I don't want to be the smartest guy in the deal. Like, what are other smart people doing? Well, I understand, obviously, that if I was the only one that saw it and I was the first adopter and I was right, then I'd have the biggest upside, the biggest reward. I talked about earlier how, we're looking for asymmetric opportunities. That means there's more upside than downside. And the way that you get that asymmetric bet, that asymmetric opportunity, is by having asymmetric information. I need to have information that most people don't have. And so if I was the only person that knew it and I was the smartest guy, and potentially I got it right, then yes, the reward would be great. But the risk of not being right is too great for me. And so because of that, like in this deal I'm looking at right now, I just said, well, who else is in on the deal? I want to make sure that I'm not the smartest guy. And so they finally pulled in this lead investor. And so now that gives me confidence, because I know that just right off the bat, having more eyeballs looking at the same thing is always going to be good. But their manpower, the amount of effort, the amount of money that they spend to do their due diligence is just going to be so much greater than what mine is. And so that's one thing I'd look at. And so back to Bitcoin and back to where Bitcoin could be. And okay, so CNBC ran an article today saying it dropped 10%. And is it time to pack up and go home? Well, what are the smartest people doing? So I mentioned earlier before the break that we were going to look at two examples. And so the first example I want to bring to is who I think, after listening to hours and hours and hours and hours and hours of content, might be the smartest guy. I don't want to say in the world, because there's different people that are smart in different areas, but probably the smartest guy in relation to technology and money and where things are and where they're going. And that is Michael Saylor. Michael Saylor is the CEO of MicroStrategy. I think he's like one of the longest running CEOs of a public traded technology company, billion-dollar company. And he famously kind of splashed onto the Bitcoin scene about a year ago, and they took their reserve. So you have a corporation, they have reserves, right? They have savings. They had about $500 million of savings or reserves. Now, what do companies like that do with their savings? You've heard of Apple that has billions and billions or $100 billion of cash sitting around those reserves, and so they have to manage those. They can't just leave those sitting in the bank, so they're actively trying to make sure they're not losing value like the dollars are. And so MicroStrategy famously decided to put it all into Bitcoin. Michael Saylor realized that the dollar, leaving their money in dollars, is like a melting ice cube. It's losing about 24% in the last year of its purchasing power. And so you have to find a way to offset that purchasing power. And so they decided to put it all into Bitcoin. That's turned out to be an amazing deal for them because it's gone up about 300% in the last year. But they've continued to buy over and over and over. Now, like I said, I've been listening to Michael Saylor hours and hours and hours of his content. And he's not just new on the Bitcoin scene. Like I said, he's in the tech space. And so go back and listen to what he was saying about Apple and Facebook a decade ago. Right? The guy's got track record. The guy's got perspective. And so when I look at somebody like that who understands technology, understands money, at a level that few have yet to see, and I see the conviction he has, that obviously gives me comfort. But even more than that is he continues to buy. So here's an article from August 24th, which again says MicroStrategy buys more Bitcoin near peak levels. So it says Michael Saylor, CEO of MicroStrategy, announced that his enterprise software company has just scooped up nearly 4,000 Bitcoins for approximately $177 million. So that was August 24th. If we go over here to the chart and look at what was the price on August 24th, it was 24th. We're looking at about $49,000, $49,500 ish. So I don't know where he bought it exactly. Somewhere on that date, somewhere in the $49,000 range. Today, right this second, at the time of this recording, you can buy it for $43,900. So he bought it at $49 and change. You can buy it at $43 and change. Wow! If you had the opportunity to front run someone like Michael Saylor, wouldn't that be a pretty good strategy? We saw Twitter CEO Jack Dorsey, they put a bunch of their reserves into Bitcoin as well quite a while ago at 55,000. Are you smarter than Jack Dorsey and the Twitter management? Are you smarter than Michael Saylor and their management? I can guarantee you they put way more time and effort and energy and money into figuring out how to manage their reserves than you do with yours. And if they think that it's okay to buy at 49,000 or 55,000, you have the chance to buy at 43 right now. So that's something. In addition to that, it's not just people like Jack Dorsey and Twitter or Michael Saylor in the tech space, but we can jump over and look at nation leaders. So here I have up on the screen, we have the president of El Salvador, President Bukele, and they famously made Bitcoin a legal reserve, a reserve tender, meaning that everybody in the country has to be able to allow people to pay in that way. And they that famously went into effect on September 7th. And they went and bought a bunch of Bitcoin and just sent it out to everybody. Anybody that downloaded their Bitcoin wallet got about $30 in Bitcoin. Now, I'm not going to dive super deep into that right now. And there's critics of that say, it wasn't smooth. There was problems. There was bugs. And yeah, there was. But so what? I mean, of course. I mean, you're going to switch an entire country onto this and flip the switch. I mean, you're going to have bugs. I don't see anybody could get mad about getting $30 in free Bitcoin. I sure as heck would sign up for that if somebody wanted to send me $30 in free Bitcoin, as I'm sure you would as well. But what are they doing? Well, they bought Bitcoin, right? But now, as it dipped today, a couple hours ago, the news came out that they bought the dip. They bought an extra 150 Bitcoin worth about $6.7 million at the current exchange rates. He made the announcement on Sunday night when Bitcoin was about 48,000. Like I said, right now, he said, quote, "We just bought the dip, 150 new Bitcoin." So again, they put a lot of time, money, effort, energy into figuring this out, and they're buying, and you have a chance, again, to buy below them. And so if I can get that opportunity, I would. Like I said, if you were with us before the break, I mean, is it expensive or cheap compared to what? Well, compared to when it was zero, it's expensive. But compared to where Michael Saylor and President Bukele bought, it's cheap. It's cheap right now compared to where it could be. You know, Kathy Wood, head of ARC, maybe one of the smartest ladies on Wall Street, says it can go to $500,000. Is it cheap or expensive compared to what? Well, compared to that, it is cheap. And so you have the chance to get in cheaper than some of the smartest people in the space. And so if I have that opportunity, I'm taking it. That's asymmetric information that gives me the asymmetric upside. It's the only way you get it. But you got to act on it. You got to hear it. You got to learn it. You got to believe it. But you got to act on it. It's the only way. But if you do, and you can have the perspective, take those lettuce hands and turn them into diamond hands, and you can hold through this volatility, the reward's going to pay off. The reward will pay off. And so take this information, build into your own education, use it to your advantage. Asymmetric information, give you that asymmetric edge, that asymmetric opportunity. And that's why I'm holding Bitcoin, and that's what I'm expecting, and that is what gives me perspective. And I hope it gives you perspective too.